सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Exactly 2 months back, towards the end of August, we had done a Macrosutra video discussing consumer sentiment and consumer confidence. The CMI's Consumer Sentiment Index and the RBI's Consumer Confidence Index had all shown great improvement. And that was the beginning of the festival season. We said the Indian consumer is feeling confident again to spend. Since then, there have been other data points that have sort of tried to indicate different other things. Inflation has gone up again, especially food inflation. Growth targets have been cut for the full year. The rupee has crossed 83. Forex reserves have been falling. Job creation has been a roller coaster. And then September has seen other kinds of data. Car sales hit the roof in September, the all-time high. And today, Shoppers Stop, this mega chain of stores around the country, has forecast that their festival quarter will be even better than what it was before the pandemic. And now we are hitting Diwali. A happy Diwali to all our viewers. But does that mean it is also a happy Diwali for the economy? That is the question we are asking. Welcome to Macrosutra. I'm YP Rajesh, Managing Editor at ThePrint. And hi, I have Economist Radhika Pandey from NIPFP with me. Radhika, first of all, a very happy Diwali to you and your family. What do we make of this consumption surge in September? There is Diwali. This thing about consumption suddenly shooting up. How do you explain that?
So normally what we see in a number of series, especially related to consumption series, we see a spurt during this time. Particularly from September, October, November, we see an increase in consumption, and that is due to the festival effect. Because in a number of across the country, we see different festivals being celebrated. We start with Ganesh Chaturthi, then we have Dashera, Diwali. In between, we have Dhanteras, where people do a lot of buying of gold and steel utensils and all. So because of all this, we do see a surge in demand as well as consumption, particularly for consumer durable items. And that is visible if you see a lot of surveys and estimates that are being conducted for this year. We see there's one conducted by the Traders Association, the Confederation of Indian Traders, who say that this time they expect Diwali sales to surpass 2.5 trillion rupees.
2.5 lakh crore.
Yeah, 2.5 lakh crore, which is higher than last year by almost double. Yeah. So there is an increase, there is an optimism, there is also this pent-up demand because of 2 years of muted demand, lockdowns, pessimism. Now we see all that increasing in demand despite inflation and despite other problems like growth revision cuts. We are seeing an increase in consumption.
This is sort of expected every year because we see these huge advertisements inviting people to spend and big sales and offers and cut in loan rates, all of that. And so it is sort of expected that, a lot of people say, I will wait for Diwali to buy something. I will wait for the festival season to buy something. So the big picture of consumer demand and the bigger picture of what it does to the economy, is it predictable in the sense that, in September, October or October, November, depending on when Dasera and Diwali happen, that, I can expect this to go up at this point of time, but then that does not mean much to the overall economy. Is that how you can see it?
Yes. So whatever you discussed, that is what we call as seasonality.
Okay.
For example, some things that occur regularly every year at a particular point in time, that is called a seasonality. And many series, many data points exhibit this seasonality. For example, in the US, the best example is that during Christmas, we see a surge in sales. So every time during December, if you just plot the retail sales data, we see that during December there is a surge, and then it normalizes. So it is what is termed as the seasonal pattern, which we see across a number of series, particularly the sales series, because that drives consumption spending. Same thing we see here also in the jargon of seasonality, or what we say, there's some things which are occurring at a regular intervals that we call as seasonality, that this particular series shows seasonal peaks. So in that sense, Diwali is also a kind of a seasonal peak where we see that in some series we see an increase. So yes, to that extent, it's a predictable increase. The magnitude may vary, but around this time, we do see an increase in consumption. Magnitude varies, and it's what is called as a moving holiday, because while Christmas is on 25th of December, the date for Diwali varies between October and November. So depending on that, the entire festive season is determined. It peaks around Diwali, but the surge begins from say mid of September onward, and that is what we see in a number of series. In some series we may not see, but it is quite visible when we see the sales of shops and so on, and increase in consumer durables.
You talk about how to differentiate seasonal change and long run change.
Yes.
So can you tell us about long run change?
Yes. So as I mentioned, that this is particularly during Diwali when we see this surge. It is a seasonal peak. It is a regular pattern that we see across a number of data, across a number of series. Now, whether this is going to be sustained or not is the question that merits discussion, and this requires, what kind of policy support is needed. Do we see this spurt in consumption, getting sustained, or is it going to fall drastically? Is it just Diwali effect, or is it improvement in consumer sentiments, or improvement in general economic condition, improvement in consumption way past Diwali? So those are the questions that need attention. So the point here is that the spurt in Diwali by itself is not an indicator of the underlying series, and we should not just be looking at the period around Diwali to infer about whether there has been a reasonable revival in demand. That requires looking beyond, and that also requires what happened over the last 4-5 years. So we do see this spurt, and then we see some normalization happening. It doesn't fall, but there is some normalization. That peak that we see around festival effect, it tends to taper off.
But so far this year, from what we have seen from April to October, the rise, and then the other indicators I talked about, inflation, growth, forex, and all of that. What are those indicators telling you for the rest of the financial year?
Yeah, so it is the situation is volatile, it is uncertain. But if we look at some of the indicators that have a bearing on consumer demand, one of the most important indicator is inflation. So what is the trajectory of inflation going forward? What do we infer from the recent minutes of the Monetary Policy Committee that was announced just 2-3 days back? What is the thinking around inflation? So if we look at that, and if we look at the recent October report of the Reserve Bank of India, they say that inflation might have peaked. So the worst may be over for inflation. And we will see gradual easing of inflation, though it will be still above the target, but the 7.5 was the peak, and we should see some tapering. Now, again, a part of it is also driven by seasonal factors, because normally in winters we see decline in vegetable prices. So a lot of it will be seasonal. A lot of it is due to favorable base effects. So a combination of all these things, but yes, what we do get to hear is that there will be a slight decline in inflation, though there are headwinds like the unseasonal rains that we saw the last few weeks will have an impact on food inflation. So there is this uncertainty, but broadly what we can see is that inflation will likely taper. And if we see some easing of inflation over the coming months, that bodes well for consumption, because if inflation comes down, or if there is some expectation that the peak may be over, that also gives a boost to sentiment. It gives a positivity, so that should help in sustaining the spurt in consumption. That is one factor. The other is credit.
I was just actually, in fact, coming to the bank credit part of it, where you talk about how it has grown 16.4% in September, and there are a lot of technical points in the piece which is published on Friday morning, Macrosutra in text on theprint.in. Please read it. We will give you the link to the article in the notes of this show or the description. In that piece, Radhika, you say that a recent RBI research paper highlights that the ratio of gross financial liabilities to gross financial assets has remained less than 40%, and household balance sheets have seen a moderation in leverage. It's a lot of economics, hardcore economics. Can you explain that to us?
Sure. So, I begin with talking about credit, that credit demand has remained more robust despite increase in interest rates. RBI has already raised rates by 190 basis points. So why is that we have not seen a dampening of credit demand? And that is because household balance sheets, that means their assets and liabilities, there is a favorable mix in the sense that liabilities here means household, how much they have borrowed, and assets means how much they have invested. So if household investments are more than what they have borrowed, that means their returns will be more than what they have to pay on their liabilities. So if we look at the overall picture of household assets and liabilities, we see that it is favorable, and this is coming from the RBI study which was conducted as part of the bulletin. So RBI comes up with this monthly bulletin where they have a state of the economy report, and then they have some papers. They have some articles on variables of interest. So this time one of the report or one of the paper is on households savings behavior, where are households investing, and there if we see there are two inferences coming out. One is that households are borrowing, the share of household credit has increased. People are borrowing, but despite that their assets are much more than their liabilities. So just as we see in companies, we see that are they highly indebted? That means, are they highly leveraged? So that is again the question that we ask for households. Are they highly indebted? That is not what we see in the data, and that gives the households a propensity to borrow more because their balance sheets are. It's not that they are highly indebted, which constrains their ability to borrow more. So that gives the confidence that households will be borrowing despite rise in interest rates. And on the other hand, now RBI is also giving some indication that they will be going slow on interest rate hikes. So that will also be a positive feature because there was one discussion by one of the RBI's MPC member, Professor Verma. He said that, now we should wait and see. We have done a lot of monetary tightening and let us see its impact before going for further rate hikes. Because when you raise rates, it takes some time to show up in the demand. So let us wait. So all these do point to the fact that maybe the Reserve Bank of India will go slow in raising rates. So household balance sheets being better and Reserve Bank may go slow in raising rates. All these two factors in combination should ensure that the consumption will remain on a trajectory, and it's not, it doesn't get dampened once the festival effect is over.
But the one red flag you raise, Radhika, is rural wages. The rural wages have not grown as much as they should. There is more demand returning for Manrega jobs, which means there is a distress. Rural distress continues. So it may not be such a very happy Deepavali or Diwali in the villages and countryside.
Yes. And if we look at inflation, rural inflation has been higher than urban inflation. And rural inflation, the rural consumption basket is more affected by higher food prices, higher cereal prices. And given that unseasonal rains have led to some crop losses, there is going to be impact on the purchasing power. So over the last 4-5 months, we have seen that nominal wages have increased, but because inflation has increased much more than the wage rates, so the real wage rate has turned negative. So so long as the purchasing power remains subdued because of the negative wage rate, we do not expect a broad-based revival. In some quarters, we might see revival, those who are able to borrow from banks, those who have the credit worthiness to borrow, they might see. But on the other side, there's a big chunk where consumption might be subdued because of the wages remaining negative.
Let's take some questions, Radhika. We have a lot of our viewers interested in what's happening to the economy during Diwali. The first one is from a new viewer, at least a new questioner, Deep Malya Ganatet. I hope I've got that name correct. Thank you. Welcome to The Print. Do you think what government did by increasing the income in some sectors some sectors and giving away 2-month advance salary to railway employees was good or is good for the increase of consumerism in current time?
Definitely, given that consumption is 60% of the GDP, any boost to consumption is going to lead to higher consumption spending. Any step to give some boost to consumption, any step to put money into the hands of people will lead to multiplier impact on consumer demand. So definitely we saw 4% dearness hike, we saw bonuses, and generally we do see DA hike and bonuses being given around Diwali time, which also contributes to increase in demand during this period.
Vishwa Pratap Singh asks, with RBI tightening monetary policy, rising inflation and external factors like Ukraine war, etc., this Diwali seems to have little less fervor. What will be your advice to the government to make Diwali 2023 a happy one?
So, firstly, despite all these external headwinds, Russia-Ukraine war, growth revision, IMF predicting that 1/3 of the global economy will be in recession this year and next year, we do see consumption revival. We are seeing people buying, people doing a lot of consumer spending. That is quite visible. But to further promote consumer spending, what needs to be done is, again, rationalizing taxes, looking at the GST structure. Are there some rates which can be rationalized? Can we move to a uniform tax rate? And also, what steps need to be taken to reduce the multitude of cesses and other taxes which make the system complicated, and more move towards a simple tax structure so that the compliance incentives increases. So these are some of the steps that can be further taken to improve the predictability in the economy and improve confidence.
One of the things I keep hearing on some of the business channels and reading, Radhika, is that how everyone talks about India is this domestic consumption story, while the rest of the world is going through slowdown or they're on the verge of a recession. India seems to be a bit of an island, although there is also this argument of decoupling. You cannot be decoupled from the rest of the world. If the entire, a major part of the world slows down, how can India grow faster? So I think that is a thought we have to keep in mind in 23.
And given all this, even if India achieves 6 or 6.5%, that will be quite an achievement.
Yeah, because China is going below 3. Sankalp has a question. Ahead of Diwali, we haven't seen any major automobile launches. Even the Bollywood Diwali releases are low profile. Big stars but limited budget movies. Are firms skeptical about demand? Even the World Bank's projection of 6.5% growth amounts to an addition of only about $200 billion to our economy. Why are the 8 years of infrastructure push not emanating their multiplier effects? Should we reflect upon or rethink this infrastructure-led growth formula?
Okay, so
heavy question.
Yes, so I have 2 points to make here. One on the whether firms are expecting a demand revival or not. A very useful indicator to look at this is the capacity utilization. So in the December quarter, we saw the capacity utilization by firms picking up. So when the inventory or the existing capacity utilization picks up, that means that firms are anticipating that there's going to be increase in demand, and hence they are using up their capacity. What we saw in the first quarter was a slight moderation. So it came down from 75 to 72%. So that gives some indication that maybe we are still away from a broad-based recovery of consumption if we look at the firm's capacity utilization. So that is one. And on the capex-led growth, so while a lot has been done to promote capital expenditure, government is spending, even state governments are being incentivized to promote capital expenditure. What also needs to be seen is that there are a lot of cost overruns happening. You know, the projects that are announced, they need to be monitored to see where they are going wrong, why there are delays, why there are cost overrun. So unless that part is also fixed, we will not see the multiplier effect of capital spending on GDP and so on. So monitoring as well as the capacity utilization, these are the two elements that will need to be washed out to see whether the demand is going to be sustained or not.
The next question is from Aditya, regular viewer. Hello Aditya, hope you're well. Do you think government should come up with some initiative at this moment to boost purchases to cap the ongoing festival season, just like they did in 2020 when they had linked LTG with purchase of assets or appliances? But 2020 was a different time altogether.
Yeah, so 2020, these initiatives are all part of Atmanirbhar package and to boost consumer spending at a time when the economy was in the midst of a lockdown.
Was shut down.
Yes.
The economy was shut down.
The economy was shut down. So those stimulus packages had to be given during that time. They were timely. They had to be given. But this time around, we are seeing pent-up demand and we are seeing economy recovering. So those kind of stimulus packages may not be needed at this time, at this juncture, because they also entail fiscal costs. So every step, every initiative needs to be balanced, looking at other considerations. We don't see that kind of an incentive needed, but yes, like we have seen the DA hike, all these kind of stimulus measures do help in promoting consumption.
And let us also keep in mind that the government needs to safeguard its fiscal situation and revenues. Where are the revenues?
Yeah, where are the revenues?
Karthik Parashar, do you think with the increase in the dollar index, India will focus on its domestic industry for things like coal, oil, seeds, pulses and all other products that domestic market can produce? But instead we choose to import all these products.
So if we look at oil seeds and pulses, yes, we are traditional importers of oil seeds and pulses, and therefore any increase in international prices also affect us. But if we look at the trajectory over the last 4 to 5 years, our imports have come down. So it's not possible to completely replace imports with traditional, with indigenous production. But what we are seeing is that domestic production is increasing. If we look at the estimates of food grain production for 2021-22, we do see improvement in production of pulses and oil seeds for this year. So having said that, the other element is that now international prices are also falling. If we look at the World Food Price Index, we are seeing a decline in the food prices. We are seeing a decline in the imports of foods, imports of pulses and oil seeds. So that also bodes well for the economy. So gradually we are seeing an improvement in domestic production and reduced dependence on imports.
The last question is again from Aditya. Second one, it's a Diwali bonus for Aditya. I'm just joking. Recently, direct tax figures have increased by 16.3% from last year. What can we make from this, considering the fact that inflation is high, growth is below expectation, unemployment is also high, but direct tax figures have increased?
We need to understand that, just looking at direct taxes, what proportion of population is paying taxes, that is important. And why we are seeing an increase in direct taxes is because of two factors. One, compliance has improved. One, definitely there has been an improvement in economic activity. There is inflation. All these have an impact. But what we also see is that compliance has improved over the last 1 or 2 years, and that is also leading to increase in tax revenues. People are filing returns. They are filing on time. The processes have been simplified to some extent. So that is one reason. And the other reason from the corporate side is that because of the reduction in corporate tax rates that were made in 2019, we have seen an improvement in corporate profitability. So that is also resulting in higher corporate taxes. What we need to see is going forward what will happen, because now as inflation starts pinching and if the input cost pressures do not ease up, and if companies are not able to pass on the price pressures on consumers, then we might see a reduction in corporate profits and hence in corporate taxes. But right now, improved compliance and improved corporate profitability has resulted in improvement in tax revenues.
So there is some improvement happening in the overall tax collection figures due to a host of reasons. And let's hope that what consumer sentiment we are seeing during Diwali continues to improve, stays for the rest of the financial year and carries on into the next financial year. That will truly be a happy Diwali for all of us and the economy, and not just a seasonality, as Radhika says. Thank you so much for watching this episode of Macrosutra. We will be back next week with another one. And on behalf of myself and Radhika and the entire print team, I wish you and all your loved ones and your families a very, very happy Deepavali. Thank you.